comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Hi, everyone. Welcome back to another episode of Final Settlement. No shortage of volatility and updates since last week's discussion. I'm sure everybody saw the crazy volatility in the crypto and digital asset markets. Bitcoin relatively unscathed. So hope you enjoy this episode. Quick word, we have a very exciting announcement tomorrow coming out from Onramp from a product perspective, as well as last week we teased a new updated pricing structure that I think a lot of you will really appreciate. We deeply understand that we have some of, if not the best custody solutions on the planet Earth, but as far as some clients will go as far as calling it the Rolls Royce of custody, but historically price had been an inhibitor. Some clients saying they're not necessarily ready to upgrade. And we don't want that to be a reason for people not to leverage Onramp. So if you want to reach out, those updates will become public in the coming weeks. But if you want a sneak peek, you can book a consultation or reach out to me directly, Michael at onrampbitcoin.com, and would love to share more. All right, on to the show.
All righty, gentlemen. Welcome back to another episode of Final Settlement. Today is Monday, October 13th, 10:06 a.m. Eastern Standard Time. Gentlemen, how are we doing? Big week. Lots has happened over the past few days. If you've been holding Bitcoin unlevered in cold storage, you might not know anything happened over the past few days. But if you were doing pretty much anything else in the crypto space, you certainly were wide awake on Friday afternoon. But we'll get into all of that. Maybe prior to that, the three of us were in Dallas last week for a few different events. There was TexCap on Wednesday, which was, really a traditional finance, capital markets focused conference. So there was, a lot of people from New York Stock Exchange, NASDAQ, who are really pioneering a lot of things in Texas, specifically wanting to get more companies directly listed in the state on these various new exchanges, as well as incorporating in the state. And so there was just a lot of momentum and excitement around Texas in general. And then the next 2 days, Thursday and Friday, was the North American Blockchain Summit, hosted by Texas Blockchain Council and Lee Bratcher, which was great as well. So, Michael, did you have any thoughts on the days leading up to Friday, which we'll get to?
Yeah, very wild week, very wild round trip. Not wild week for us, just wild week in general coming back to the show, because I feel like there's so many different segments and things we'll touch on, from, what's going on the capital market side to the crazy stuff in crypto. But I think a few of the notable things for me that I took some things I wanted to share was related to, I guess, first, the sentiment that something's broken is something really interesting. This is less from the event, but more from meeting with family offices. I've done a lot of trips to Dallas and met with a lot of folks over the past 5 years being in the industry. And this is the first time I've really experienced, the notion of the debasement trade, and really just effectively explaining the numerator or the denominator just being broken. I think really people are primed for it. And I don't think it's anything actually to do with Bitcoin per se. I think Bitcoin took a small part of it. I think it's gold, and really what's happening with it has really got people spooked. So that was a big one. And then I think the politicians in Texas, I think would be great for you guys to hear from some folks aren't from Texas, is I thought it was very interesting and refreshing to hear some of the senators speak in a light to call out the ills of the fiscal and monetary policy and how you want to ultimately insulate or help your state bypass them. I think at the end of the day, the thing they all miss is you just want your citizens to hold as much Bitcoin as possible, because again, if you're in a world full of debasement, if your constituents don't have any money to spend, then you kind of don't end up in a good place. So I'll pause there. Curious if you guys have any thoughts.
Yeah, no, it was it's a good point around, generally speaking, people in government that were, featured at both of these conferences, really recognizing, something that we've talked about for a long time on the show, just in terms of the realities of the fiat system, the realities of the debt situation, fiscal spending, and really like the implications of that for the average citizen. So that, their constituents is that things are getting more expensive and they have no way to protect themselves effectively from the debasement. And so this debasement trade is now very much in the zeitgeist, as you referenced. And, it's not, I would say it's not something that's permeated everywhere, but it's interesting to see that, it has gotten more steam in a place like Texas, where there's general recognition around property rights and freedoms. And so it is a natural extension to say, hey, let's embrace these outside money assets as a way to protect, not only our state, but our citizenry as well. And so overall, very positive, optimistic outlook from a lot of the folks that were speaking at the conference, just in the sense of being early to this still. And if you can make inroads in terms of setting up infrastructure and getting companies to move to Texas and incorporate in Texas, I think that's all very constructive for, just being early to what is, it's being called a trade, but it's really just, properly positioning yourselves for what is a, long-term structural shift in how wealth is preserved, generally speaking.
Yeah, and even in general too, everybody who was working or related to the Texas government really stressed the fact that in their constitution they can't run a deficit. They just are trying to be fiscally conservative themselves. And then in addition to that, Texas isn't quite the capital markets that New York is, or it's still trying to like compete with California as well. And so they're just really trying to be the challenger to both of those. And as such, they want a lot of innovation to come into the city and state in general. And so with that, I think that's always a good place to be, because you have to be watching everything that's coming down the pipeline and trying to be as well positioned as possible in order to have your citizens in the right kind of frame of reference for what's kind of coming. And that's, I think, why they're so open-minded to ideas like Bitcoin and gold.
Yeah, we don't have to spend too much time here, or we can go into the rest of the show. But I do think the one thing that I want to call out, a little biased, but I'm sure you guys appreciate it, is it was very refreshing and fascinating to see a state, that is, I believe, and they didn't let you forget, 8th largest in the world from a GDP perspective. And I believe France, they're trailing France by a few months to get to 7. But it was a real idea, like breaking down from a pragmatic first principles stance on how to actually achieve being to Liam's point, a place for capital markets and businesses of all shapes and sizes to thrive, and really breaking down like there was a certain tax levy as a corporate income tax, and just different things that they were doing to protect businesses. But the thing that I really took from it was they were like, hey, we don't sit back once we do a good job and pat each other on the back, or like, hey, that was a good deal. They're like, we just want to keep pushing the ball forward. Like, we're just going to keep moving and keep grinding. And that ties into something that's interesting enough that we've done, whether it's both on the early rider side when it comes to being Bitcoin denominated, and even on Onramp when it comes to pushing from the front with multi-institution. Because I was listening to Pomp briefly and Jordan Visser this past week, and Pomp was referencing something about how he went and we need to get him on a pod or go on his and talk about this, because I know he'd appreciate it. He was referencing how he was talking to a group or a cohort of publications, media folks, and referenced how that in the future they need to start denominating returns in Bitcoin dollars and gold, and they all looked at him like he was insane. And then it just reminded me of like the debasement trade, sound money renaissance we've been talking about, but then really early riders being denominated in Bitcoin, because at the end of the day, these concepts are pushing the puck forward, but it's how we will thrive and survive as a society. But they're what looked at as taboo or crazy will eventually be looked at as the standard, in the same way multi-institution. And so I just thought it's interesting in a Texas-based firm. You see what Texas is doing. There's just there's a level of like craziness in the world, and that to like see through it or push forward, you just have to have a basis of I don't know what it is, but Texas has it, and I hope we get to embody it, because there's no question like they're leading from the front when it comes to what's happening in the U.S. Outside of like Florida, I'm not sure of any other state that's had as much growth since like post-COVID.
Yeah, and the other thing I would say too, just a broad takeaway from the few days we were there, speaking with various people in the industry, and then also sort of prospects and clients. It's Texas in general, I would say, it's very similar to how we've historically talked about like the Middle East. Like there's a predisposition to understand hard assets, understand commodity driven markets, and also understand, there was a lot of panels and discussions on the Bitcoin mining side at the NABS conference as well. And so there's I would say a natural inclination of, these folks to understand Bitcoin as a hard asset, as an outside money, understand the linkages between Bitcoin mining and the energy space, the oil and gas space. So there's a lot of, it's basically, a very primed area to understand a lot of this stuff. And that being said, I would say it's still generally early in that discussion, just given like, if I want to take the more cynical view on some of the events, like, there's still a lot of conflation in the sense that, there's a lot of panels and discussions around stablecoins and the tokenization of real world assets. And really, overall sort of still bucketing, Bitcoin and crypto and digital assets kind of in the same innovation wave, if you will. And people, talking about DeFi as the real innovation here, and Bitcoin's kind of boring. Like there was some of that sentiment at the conference, which, it isn't unexpected. You have a lot of people from the industry who are, have their own incentives in mind that are driving them to those outcomes or lines of thinking. So I think that is worth noting, just given, what we will talk about today around just the broader crypto space. I do think that there's still a certain amount of conflation that's going on. Did you guys sense that as well, or?
Let's do it. Let's talk about the fuckery and how it's
all right. So yeah, as we alluded to, Friday got a little crazy. And so there's a lot of different ways we can take this, but I would say the long and short of it is traditional markets closed around 4 p.m. Eastern, and not soon after that, Trump threw out a tweet or a Truth Social post, signaling that he would, implement a 100% tariff on China beginning November 1st. Now, we've seen a lot of this, the sort of trade war back and forth, tariffs on, tariffs off. So you would think that something like this, we'd already be a little bit primed to not be as reactive to it. But given that traditional markets were closed, there's this natural inclination that, crypto trades 24/7. So that is the only market to trade once those traditional markets close. And so there was a knock-on effect, basically cascading liquidations. Now, there is some other nuances to all of this in the sense that, it wasn't totally random, in the sense that, there was arguably sort of an attack here in some sense on the broader crypto space, not specific to Bitcoin, really. Like I said at the jump, if you were just holding Bitcoin in cold storage, none of this really impacted you. We're back over 114K, which, we were around the same levels like 10 or 12 days ago. Whereas some altcoins, it's always funny to me that people characterize like certain altcoins as blue chip, if they're in the top 25 or top 100, even in terms of market cap. But a lot of these things, in a matter of minutes on Friday afternoon, dropped, anywhere from 70 to 85% in market cap. Now they sort of bounced back, but this was the broad takeaway to me is that it just shows the fragility of the broader digital asset crypto ecosystem, that when something like this occurs, where there's a broad deleveraging and sort of a cascading liquidation that occurs, a lot of the market makers just step away, and these things really have no floor. And so that's what we saw happen on multiple sort of venues across decentralized exchanges and centralized exchanges. I think the number being quoted that was observable on decentralized exchanges was something like 20 billion in liquidations. Now that number is probably understating the total amount of liquidations because we don't have full transparency into some of the centralized venues. But that was, my sort of takeaway is just like, this is something that we've known sort of as Bitcoiners, is that a lot of this, sort of vaporware, to be honest about it, has a lot of sort of spoof trading. Market makers are sort of keeping these things afloat. And when they step out, there's really no floor. And so when these cascading liquidations occur, you could see this occur where, some of these things are dropping 80 to 90% in a matter of minutes. So pretty wild stuff. But again, like the takeaway here should be like, just own Bitcoin in cold storage with no leverage, and none of this really impacted you. But curious your guys' thoughts on all of this.
Yeah, I 100% would agree with everything that you just mentioned. I think that the proliferation of perps and hyperliquid and all these different exchanges that are DeFi exchanges where there are no shortage of people who are in the broader crypto space or now being interested in the crypto space in general and are telling me about how they have a friend of a friend or something like that who can get them something like 24% annualized returns by taking market neutral bets and not having any directional exposure to the crypto markets. But that it implies or expects that these markets are always as liquid as like the Bitcoin markets, and there is somebody who is going to step in, and there's a lot of actual liquidity in there. And as we saw, especially over the weekend, that's just not necessarily the case, especially for a lot of these altcoins. The reality is the fact that we're just going to be in a high volatility environment, going back to, the actual announcement that caused this to happen. We are going to be uncertain about exactly what's going to happen with tariffs and where everything is going to fall. And so, as such, I think the point really stands to what you mentioned, Brian, earlier, is just like, it's very prudent to avoid leverage, especially if you have any short-term obligations that you need to make, and just think about living your life and saving your craft so you don't need to speculate in the markets, especially on a very short-term type basis.
Yeah, so there's a lot here. I think there's a lot here from crypto. There's a lot here from TradFi. There's a lot here in general. One is what Brian maybe finished off with is maybe the key point to take away is if you're in spot Bitcoin without a single counterparty, whether it's yourself, right, or an institution, you're in a really good spot, even if it is yourself. With an institution, that's a different situation because we don't even know where the rest of the bodies are going to be buried. And as far as like where holes exist, there was a lot of stuff that happened in 21 where people blew up and you didn't find out till 6 months later that they were insolvent, which is a thing for everyone to realize. But the notion of like Friday, I didn't know what was happening. I was traveling. And, if you run a lending book, then the volatility, you're paying a little bit more closer attention, but we don't run a lending book. And so the market's moving and, I didn't really understand what was happening until later. And I still didn't fully understand because the move wasn't as drastic as you've seen. Like historically in 21, when you saw something happen like that, you were moving like 50% down in the Bitcoin markets, or 30 to 50%. This was only like roughly 10%. When it did the deleveraging to 105 or whatever, that was more market structure where things get wonky at the very end, but it popped right back to 112. So a few things on the crypto side. To Brian's point, all these assets are highly liquid. So there's only a few market makers that are actually trading against each other. And eventually when they step out, because the market, goes no bid and there's like who's left holding the bag, all the liquidity drives up. And that's where you see these things completely go down. So that's one. What Liam said, those market neutral trades and or delta neutral trades and these proliferation of perps, like these things have never existed, and nobody actually knows the level of contagion and cross collateralization and the shit that exists. Like actually nobody really knows. Like if you go listen, because I find this stuff fascinating, and so you go listen to some of the best, quote unquote, crypto TradFi pods, and they all have a different take on what the hell happened, and none of them can tell you anything. They're just like, well, there's auto deleveraging, and then like the liquidations, and then the insurance fund. And these delta neutral trades, well, they're getting stopped out when they are getting liquidated on the downside. And then if they were long, they're also getting stopped out because the auto deleveraging just stopped out their position. So they just got like screwed on both sides. And yeah, I mean, I think that's like the core notion of so you take that right from crypto and it's all a Ponzi. And I think a lot of people know, and maybe you can make some money, maybe you can't, because it doesn't matter if you had everything right. If the exchanges and the fragile infrastructure you're trading on blow up, well, you're just left holding the bag, even though if you were short or long. But my real takeaway here is that this is basically the same system, but accelerated in the traditional finance world, like in the sense of, the counterparty risk, the amount of leverage, it's just hyper scaled and hyper accelerated to just, be at the whims of Trump tweeting. That what we've been talking about, and the thing I think gets the least amount of appreciated, and Brian and I were part of some very serious or interesting conversations with very wealthy people that have no Bitcoin. And we talk about Bitcoin being asymmetric, and what I used to think of it as asymmetric is like, well, you get the exposure to Bitcoin's upside, and then you reduce your exposure to the dollar's downside. But what I'm really starting to believe is asymmetry is you reduce the counterparty risk to whatever other buckets of assets you hold, because as we'll talk about later in the TradFi space, there is no shortage of like air pockets in a lot of different funds, banks, everywhere that you look, because there's too much debt and not enough dollars. And that's the thing I don't think people appreciate, is like there aren't many safe places to park very serious capital, including like commercial, residential in certain cities, because we saw what happened in COVID. And so imagine you have a bunch of real estate exposure in a given market and something crazy happens. Well, there goes 60% of your net worth. Like, so anyway, I know that was a lot, but that's like when I think about, when I see these deleveraging, it's like, this is just a proxy for the rest of the market.
Yeah, that's a good point. And the other sort of high level takeaway for me was, I saw some of this sentiment on X was like, sort of in the early aftermath on Friday evening was like, today is a day where a lot of Bitcoin maximalists were born, in the sense that if you are a crypto trader and, you thought you were doing well, making some money, taking some leverage, taking some bets on, pretty far out on the risk curve, whether you knew it or not. And something like this occurs where, you thought you were in a decent enough position in terms of the leverage, and you just get completely obliterated. Like there was countless sort of stories and accounts of, people who had built up, 8-figure balances trading crypto, and it's all gone in a matter of minutes. Like that is a wake up call for these people to say, hey, maybe these Bitcoiners are right. Maybe, just holding Bitcoin is the thing here, and the rest of this is super speculative, because these people, frankly, have been sold a story that just isn't true, right? Like, whether, any of these given narratives around all these different tokens and why they should have value, kind of goes up in smoke when you realize there's no actual bid for these things. And then you juxtapose that against Bitcoin, which, to your point, Michael, like wicked down to maybe 105 on certain venues, and quickly came back up to like 112, and now we're back over 114. Like that shows you like there's actual demand for this. There's actual bids here, sort of globally, as opposed to just, propped up markets with market makers who, when they step out, these things just have zero floor. So that was the other big takeaway to me. Like this should be an eye-opening experience for a lot of folks. Now, the counter to that is like, for the uninitiated, this is another event that, unless there's really good articulation of what occurred, people are just going to continue to lump this in as crypto. Like, oh, there was a flash crash in crypto, and not be able to distinguish that, Bitcoin was really, unaffected by this in a large part. But that is my fear, that like this is just another thing that, the uninitiated is going to say, hey, all this stuff is speculative.
It's not even, I mean, it's not even that's like probably a optimistic lens. This goes back to Safe's take about SBF should have never went to jail, because when you put SBF in jail, well, then the market just assumes that 2021's fault was SBF versus this whole thing of crypto and the Ponzi that it exists. Similar here, they're going to call out all these other things. They're going to forget that it was crypto and that it was vaporware and that there are liquid markets and they're highly fragile. I'm not saying this is what happened or didn't happen, but I'm fairly certain that what happened Friday, we will see 100x the amount of deleveraging in the next 24 to 36 months. Like, this was just a dry run. And, but the thing that I think what really bothers me is like, it's really just simple. Like, there's no such thing as a free lunch. Like, money doesn't grow on trees. So it's the same trade, whether it's the DAT trade or whether you're farming, you know, the risk-free rate, or you're hoping for your passive 10%, you know, returns. Like, unless you understand where that yield or that return is coming from on a long enough time horizon, it's going to be looped into this whole like bubble here, and then you're going to be exposed. And that's why you park the money in the thing that's safe, and then you just go back to like making more money. And it's really actually pretty straightforward, but the world has gotten that crazy that that's what the crypto casino is. It's a embodiment of the gambling that exists masked up, like TradFi, which TradFi also is, you know, the casino. So you like blend them together, you add a little, you know, Polymarket 3 billion, and next thing you know, you're ready to repeat this back.
Yeah. One other thing that we touched on, but didn't really stress too much is, the fact that Bitcoin didn't dump nearly as much as these other assets just shows that there are a lot of limit orders of people who just want to acquire Bitcoin at a cheaper rate. I honestly just don't even think that the rest of the crypto market even thinks that long term, that they want to acquire their assets at a cheaper rate anytime that the market dumps, because they're just so focused on making a quick buck today. And yeah, there are definitely a bunch of traders in the Bitcoin market that are speculative too, but anytime that this goes like any significant amount of risk off, there are a bunch of savers who are willing to step in and just acquire Bitcoin for the long term as well. Any dip that happens, which isn't necessarily the case with the rest of the digital assets market.
Hey guys, hope you're enjoying this week's episode. Quick word from Onramp. As you're familiar, we have multi-institution custody, which protects clients from individuals all the way to institutions. We're onboarding some of the largest publicly traded companies holding Bitcoin as their treasury reserve asset. But we also have a bunch of features, you know, within that, whether it's traditional financial services like the ability to trade, set up inheritance, get Bitcoin back loans. But we also have Onramp Guardian. This has come up a bunch as deep fakes come to life, become more prevalent. Physical attacks become more and more realistic. There is no shortage of tools and services that you can add on top of your multi-institution custody arrangement to make sure that you can rest assured that your assets will be safe and secured. These come by the way of, you know, legal time locks from 7 days all the way to 365 days to velocity controls, as well as other 3-factor authentication methods that you can use outside of the traditional kind of logic that exists online. If you want to learn more, I'd encourage you to sign up via our self-onboarding or book a consultation, and the team will happily walk you through it. All right, on to the rest of the show.
Yeah, that's well said. The only other just small note I wanted to reference on this was there was some interesting takes and sort of takeaways around, you know, the concept of real world assets. And so there was, you know, a version of tokenized gold, Pax Gold, that basically depegged, you know, because the price of gold didn't really move that much on Friday. It was still around 4K, but this version of tokenized gold, you know, basically spiked down to around 3,200. And so people got liquidated if you had, you know, even a marginal amount of leverage on those assets. And so it just gets back to this whole concept of real world assets is sort of flawed in my mind, in the sense that if you are entangling it with sort of whether it's smart contract risk or just liquidity risk at whatever venue is sort of issuing that tokenized version of the asset, there's just a whole host of layers of risk that, you know, are not really well articulated or very clear. And so just something to note there, because I saw that, and then I saw someone respond to that being like, oh, on our platform, it's actually better because that can't happen. We use external oracles for the price of the real world asset. So, nothing happened. And then in sort of the caveat to that, he was like, well, the way we do that is by having it not actually be able to be traded outside of traditional hours. So it's like, well, then isn't that sort of defeating the purpose of these things if like you can only trade the tokenized version when, the actual markets are open? So I just thought it was all kind of funny to me. Like, these concepts get, when you see something like this, a lot of these concepts that the crypto people talk about get called into question when we actually realize that they're all pretty fragile. Where do you guys want to go from here? We had a ton of links. Maybe I thought this was pretty interesting. Just prediction markets, very in vogue. The Kalshi raise. I forget who brought this link, but Kalshi hits $5 billion valuation days after rival Polymarket gets $2 billion, backing at an $8 billion valuation.
Yeah, I added this as part of the deals. Maybe we can speed run. We can talk about this one and then go through just a couple. There was a bunch of announcements with capital around capital formation. I think this ties in. I mean, there's interesting things happening with Polymarket from the election to. I think there was somebody that placed a bid before this, like Noble. The winner of that, as well as there was another one that just happened, Nobel Peace Prize, and there was another event. And I think there's I haven't fully rationalized this. There's an interesting case for like open markets, for people to be able to like not price discovery, but information discovery. My instincts tell me that the other side of it is darker, which is you turn everything into a market, everything into a gambling market, and it plays nicely into what we just talked about here, which you just financialize everything under the sun. But it's, the part of the investment was from ICE, which is NYSE's parent company, investing there. So yeah, I know you guys probably have additional thoughts, but I just think the overarching notion of like, these markets there. Oh, the other thing was Polymarket's rumored to be announcing, I think today it came out about a token now, which probably makes sense because if ICE is gonna, invest, I think it was I thought it was 3 billion, not 2, but either way, there's some probably warrants tied to tokens, tied to that. And that makes a lot more sense from that valuation.
Yeah, I mean, to me, I've heard people talk around prediction market, like kind of what you were alluding to around, information discovery. If there's a market for everything, that's kind of, broadly speaking, a net positive for information discovery. I guess where it gets conflated to me is like, if you have markets on various things like a public company's quarterly earnings, whether, they are positive or negative, like if that's a bet, then like there is still quote unquote insider information, because I've heard people make the argument that there's no insider information in predictor markets, and it's just like this is how you value a market, by just allowing people to bet on it. But I do think that breaks down when the market itself is on something that does actually have some insider information related to it. So I think it's going to be interesting to see how all of this plays out, particularly from a regulatory perspective. Like, if there's certain rules and stipulations around public company earnings, but then you have these more open markets on just betting either side of what an announcement could be or an earnings release could be. I just think that causes some issues in terms of like, well, there is still some insider information with some of these markets. And so I'm not exactly sure how that's all going to play out.
Yeah, I mean, it's a good point, because that's like to the notion of like leaking false information or public information. So the first dimension is like what you referenced, is if you're an officer or an executive and you leak something to somebody internal, or they have an anonymous account, and then they can go and speculate on it. And the opposite is if you're leaking negative or like information that's not true, and then they're speculating and then you're making money on the other side. Like, you don't necessarily bring the most clear market, and it is TBD if that's even correct. Like, it just brings almost negative incentives. Now the opposite is like, well, if there was somebody that knew about a assassination and they bet that they wouldn't, and then they could like thwart it. There's all these like weird like parallels you can go down, but I don't necessarily see at the end of the day and I haven't fully formed this opinion, but like where everyone is so positive on prediction markets or a net positive for the world, I don't think that's right. I just don't necessarily know. I haven't thought deeply about all the reasons.
I think it's a little bit nuanced. It's almost like the crypto casinos. Like they start off by allowing people to buy and hold Bitcoin. And that's obviously a net benefit because people can have saved their money in a better store of wealth. And then they offer the next best cryptocurrency as well, just because they think, oh, okay, maybe this one has potential and it's innovative, etc. And then you later on have 10,000 digital assets on your platform, including only pushing email advertisements for Shiba Inu and Fartcoin, and that's essentially how I kind of see these going. Like there's the poly markets and Kalshis that have definite benefits for information sharing for presidential elections and very important events, but then at the end of the day, they're also going and trying to go out on the risk curve with everything sports gambling that is more of a negative sum game as well. And that's just the incentive that they have because they need to make more capital in order to return it to their investors. So it's not necessarily, in my view, all great or all bad, but I think they're just going to get pushed out further and further on the risk curve.
Yeah.
Okay, rattle off a few more deals or headlines here. I'm going to go to the Square launches AI voice ordering and an integrated Bitcoin solution for merchants. I think this is part of a announcements they've sort of been dripping out over the past few months in terms of basically turning on the ability for merchants using Square payment terminals to accept Bitcoin. It's something that they probably in hindsight could have done a little earlier. People have been asking for this for a long time, but it seems like now they're actually following through on it. So any thoughts on this one, guys?
Yeah, I mean, I think I thought it was interesting that they put the AI in the top part. This is a TechCrunch article, so it's unrelated. And then the Bitcoin integration, I think probably, Square's playing a different game, a very long game. And so I think it makes sense where they've, slowly trickled out the type of integrations. And really, I think the biggest gap around payments has been what's commercially acceptable and viable. And it's really a time thing versus anything else. It's not really tooling. And so I think, the notion of the debasement trade, the understanding, I think there was something that came out today about 47% of Americans feel that, groceries are more expensive this year than last year. Small businesses feel it. And so to be able to give the tools and then offer, which is, I think, one of the big parts of this is offering until 2027, no interchange fees. So if somebody is paying a client or a user of the merchant services paying in Bitcoin, they don't have to pay any interchange, which is generally about 3% for Square. So I thought that was very interesting. And then obviously Square has the full kind of stack around letting them, convert into, BTC or take the dollars and convert to Bitcoin. So I thought that was an interesting aspect of, starting to like get it more and more in the business understanding of like, look, this is something that you want to be prepared for looking at. And then they obviously have Cash App. So if anybody's ever going to land the payments use case for Bitcoin, it's really was always going to be Square because of the Cash App play. And then also on the merchant services. But I think the reality is this is still far into the future because people just don't spend Bitcoin. There's not really a reason to spend Bitcoin.
Yeah, that's what I was. Yeah, that's what I was going to sort of reiterate. You referenced earlier, like there's a time element to this, and I think what you meant by that is like just the notion of people spending Bitcoin. The sort of individual incentive is to hold Bitcoin and spend dollars at current, and so in order to see material adoption and uptick in these services, you kind of need people being willing to spend their Bitcoin. So where my mind goes with all of this, it's something we've talked about in the past, is like, who will be the first merchants to recognize that, maybe the way to go about this is you actually offer discounts in Bitcoin terms. Like if a customer wants to pay in Bitcoin, they're actually getting a discount in dollar terms at that specific point in time. That would be one thing that I would expect certain merchants to adopt here. So in addition to the interchange fee thing that you referenced, there could be other ways to incentivize people paying in Bitcoin, because I think what we're starting to see is the recognition from the merchant side that they want to, save in Bitcoin, store some of their their revenue or their earnings in Bitcoin just as a defensive mechanism. But you still do need the other side of that equation. Now, you could do an auto conversion. If you want to accept dollars, you convert it to Bitcoin as a merchant. That works as well. But I think where it really turns into, what people talk about around circular economies and Bitcoin actually being used as payment broadly, you do need people to actually want to spend their Bitcoin. And so one way of doing that would be, a dollar-based discount at the point of purchase. Liam, any thoughts on that?
Yeah, I was just going to say Square is one of those few companies that actually deeply gets Bitcoin, as well as has the distribution necessary in order to turn it on for a large number of companies. I was going to say, yeah, it's going to be a little bit of a slower burn in order to have consumers pay the merchants directly in Bitcoin, but just the auto conversion of some portion of revenue directly into Bitcoin is going to be a impetus or for different payment processors in order to really focus on offering Bitcoin integration for up and down the stack, just because a lot of their companies are going to now have Bitcoin and have more of a material portion over time. And so every company is going to recognize that, even if they really want dollars or Bitcoin, they're going to want to accept both, but over time they're just going to want to save most of their value in Bitcoin. It's just very early days, but we're going to see this force other payment processors in order to have at least a game plan around Bitcoin.
Hey guys, I just wanted to give a quick update, and just something that we don't talk about enough is the Onramp onboarding process. You have at any time the ability for an Onramp private wealth individual to walk you through, help you configure, deposit, withdraw, move assets over. But in reality, we know a lot of people are sophisticated that listen, don't necessarily need the hand holding. Our self-onboarding experience is one of the best in the industry. It takes what used to take me 2 to 8 weeks in onboarding and collaborative custody, shipping devices, wallet configuration files, and everything that's associated. About 2 to 8 minutes in onboarding via our process. The wallet is set up. The keys are offline, sharded with qualified custodians, and you have the ability to audit on chain. Those assets are secure with us. If you want to check it out, I encourage you to go to onrampbitcoin.com and then go to sign up. All right. Hope you enjoy the rest of the podcast.
Yeah, maybe to rattle off a few others, so we don't have to go through all of them, but they're interesting and we can go deeper on any of them. So Securitize was rumored to go public via SPAC with Cantor Equity. I think that's interesting from the RWA perspective of what Brian was talking about. Like, there's a huge opportunity now in the capital markets to recognize the trend of digital assets. The other two that were a little bit more interesting was PayPay, which is one of the largest payment infrastructure providers in Japan, took a 40% stake in Binance. That's interesting because that's like, TradFi going into crypto. And then the other angle, or this is kind of similar, is Galaxy announced, and they didn't say who it was, which is kind of funny, but it's in their press release, and it's a publicly traded firm. So I would imagine you can get these, you can get who it is from the filings that come out shortly after. But ultimately, if somebody took a $460 million strategic position from a leading asset management firm. And I thought that was really interesting because we're going to see more and more of this, specifically the PayPay and then whoever this asset management firm is, of different lenses of traditional finance looking to integrate with digital assets. We see this all day long when we talk with RAs. And it kind of makes sense even from the Onramp perspective. If we find the right partner that has the right distribution or the right opportunity that's synergistic with what we're doing, that can help with distribution and other things that come with, RAs that hold anywhere between 10 to hundreds of billions of dollars in client assets. Clients don't ape into Bitcoin. They go in at a very, nominal, either 0.1 to 5% positions. Well, that other 95% still needs to be managed. And so I thought that was really interesting on the Galaxy side. But I'll pause there. Any of those that stand out?
Yeah, it was curious that they didn't name the firm in the Galaxy release, but I'm sure we'll figure that out shortly. It kind of relates to another one in the sense is what we've talked around, just the blending of TradFi and crypto. I think the other sort of news from last week was Morgan Stanley dropping restrictions, which allow wealth clients to own crypto funds. This is a pivot. I think Morgan Stanley was historically sort of skeptical or questioning crypto exposure for their clients, and now they're looking to open it up. And so I think this merging of these two worlds, I think, is still in the early days, but more stuff like this is going to continue to come out, whether it's on the Galaxy side, TradFi firms actually taking stakes in the crypto native incumbents, or just something more like this where it's just opening access to whether it's the ETFs or other products for their clients. This is just, again, early stages of this transition or this evolution of these worlds colliding. And I thought this was a notable one, just given Morgan Stanley, who they are and how they've historically talked about the asset class. This is a pretty big departure.
Yeah, well, they also just made that relatively large investment into Zero Hash too. And now I think this week is the first week that they're actually talking about like recommending some sort of Bitcoin allocation to their clients. And so that's something that we've kind of been talking about for a long time, that most legacy firms are not going to recommend any Bitcoin exposure to their clients unless they actually like have some sort of incentive to do so, right? If they can't make money on it, like they're just not going to push their clients what's perceived to be further out on the risk curve, especially even if they know it's better for them, they're just they'd happily be wrong if they can't make fees off of it. And so I think that's also why you're seeing more of these asset managers, like whether it's Galaxy, PayPay, and Binance Japan, et cetera, all kind of making stakes into these companies. They are they're trying to, one, learn about it, as well as two, get their clients best in class exposure to whatever they're investing in.
Yeah. And I think where this ties into the business opportunity, kind of what we're building, what we're investing in, and then just in general where the market goes, is it's super valuable to talk about in the sense that Morgan Stanley manages roughly $6 trillion in assets, and historically had just been for private clients or over, I think it is $1.5 million in net worth, and now it's available to all of them. But it's that this is just the first order. The next order is like, there's multiple reasons, and it doesn't really matter why, whether it's because they want to make money or it's because they're afraid that their clients will leave. Because similar with Vanguard, if they don't offer up digital assets, well, then their clients are just going to go down the street and take their capital with them. But then the angle is, well, where do they go next is the big line of do they go down the perp and all the stuff we just talked about and expose themselves? I feel like Franklin Templeton's very close or already involved there when you look at just how much crypto Franklin has done versus somebody like Morgan Stanley. And I've spoken with those folks. They're very conservative, and they generally look at Bitcoin as a completely separate asset than everything else. Then you start to go, well, now I have to, if you go down the Bitcoin route and your clients are holding material positions, well, they're not really equipped, again, to build the right products and services for those individuals. And that's really where acquisitions, acqui-hires end up coming into play, because it's very hard to build that from within a business. Square is able to do it, and they're able to get the right people because Jack is a leader that, is understood, that understands Bitcoin, and people will work for him. But if you're just a TradFi person and you're, have no view of the space, or even if you shill a view of the space, but it's not widely felt that you deeply understand or have the right kind of like thought on where it's going, the best talent will not go work for you. And that's really where a lot of these companies are going to get hit over the course of the next 12 to 24 months. And then especially as the deleveraging happens, as they're going to realize, oh, it was always Bitcoin. And then they're going to really be on acquisition sprees to find the right talent and businesses that will integrate best-in-class products and services.
Yeah, and the other thought I had related specifically to the Morgan Stanley stuff is, well, it's generally positive. I think we can sort of ascertain that it's very much that, this decision and this quasi pivot is being very much driven by underlying client demand. And the reason I think that is because they're still being very conservative in how they talk about it. So what I'm pulling up on screen here is actually from the report itself, which talked about this and talked about the recommendation. Well, for one, they're saying cryptocurrency, right? So this is not Bitcoin specific. They're talking about crypto broadly here. And if you look at the sort of recommended allocations here, the 4% that people are excited about is in the quote unquote opportunistic growth bucket, which I think that falls sort of more in the narrative domain of broader crypto, right? Like venture tech sort of exposure, opportunistic growth. Whereas you look at the other end of the spectrum, the quote unquote wealth conservation bucket is 0% to cryptocurrency, when, in reality, if this were more specific to Bitcoin, like Bitcoin to me falls in the wealth conservation bucket most appropriately, right? This is not a trade. It's not opportunistic growth. It's not venture tech. It's fundamentally protecting yourself against debasement, which is another way of saying wealth conservation. So I did find that notable, that like, while people are getting excited about this and saying this is huge, we do have to sort of peel back the layers here, in the sense that I think this is just being driven by client demand, and they knew they had to put out something that said, like, we're going to quote unquote recommend crypto to our clients. But when you dig into what's actually put here, it's maybe a little less positive, specific to Bitcoin, or really just showing their hand in terms of not really understanding what's going on here.
Yeah, I think we don't have to pull it up unless you want to, but I think this ties into the central banks and banks in Russia offer also just putting laxer controls around crypto activity, which I think is interesting, because we've seen the opposite with India. And I think it came out last week, India was like going after 500 of the top like high net worth people around crypto and tax evasion. Like there's an antagonistic view that certain sovereigns are taking, versus you're naturally starting to see, others like Russia let their banks start to offer some of these services, which they historically have. I think they were the last ones, maybe 6 months to a year ago, took a similar stance with Morgan Stanley, that they were starting to lean towards it, but it was only for a very select number of clients with a certain, net worth standards.
Yeah, I think Russia is one that makes sense, though. It's still less than 1% of bank assets can be digital assets related, but obviously back in, I think it was 2022 or 2023, when their treasuries were seized, and then just commodity-rich nations in general are going to be the first to lean into Bitcoin. Just like we've seen with Texas, it's just going to be those types of countries that understand there's a limited amount. If you have the resources and have a lot of energy, it's just a trade that can allow you to get more Bitcoin if you're mining there, and just use excess power, which will obviously enable more power generation for your grid and consumers too. So it's just it's very different to see versus some of those other countries like India, which honestly I think that they're just going to be a little bit slower, because I don't know if they have quite as much natural resources in that country compared to a country like Russia.
Yeah, as it relates to the sovereign sort of discussion, there was another noteworthy announcement from last week. Luxembourg is the first Eurozone nation to invest in Bitcoin sort of at the sovereign level. So their sovereign wealth fund invested 1% of its holdings into Bitcoin ETFs, making it the first state level fund in the Eurozone to do so. And then somewhat similarly, I think this is just worth noting, you referenced this earlier, but a Bitcoiner, the leader of the Venezuelan opposition, Maria Corina Machado, she won the Nobel Peace Prize and is a Bitcoiner, and has proposed using Bitcoin as a national reserve asset for Venezuela. So I think this is very positive to see, just in terms of, again, those sort of the sovereign level game theory playing out in real time of adopting outside money, adopting reserve assets that can be manipulated by either the US or anyone else sort of managing fiat currencies. I think this is a very positive development.
Yeah, should we wrap with the capital market stuff related to just the I forgot, First Brands?
Yeah, I'll pull that up. Yeah. So I haven't done a deep dive on this, Michael. I know you have, so I'm gonna hand this one to you. But what is First Brands and what's going on here?
Well, I haven't necessarily done a deep dive, because it's like the perp stuff. It's pretty wild. If you actually, and this will give context, if you open up the other link, I think that was in there for Zero Hedge, it'll show their org chart, which if you ever seen an org chart like this, you should generally run. I think we've seen a few recently in the digital asset space, and most notably FTX. But effectively, First Brand started as like a smaller automotive business, and it ended up picking up a roll-up strategy where they own some of the large, like the notable thing that I think is in one of their like either some document was that if you have a car over 10 years old, you basically have a part that came from First Brands companies, because it was anything that was post manufacture where you can buy it like half the cost, right? So that all sounds pretty good. Is like you have wholesale distribution of auto parts. What ended up happening is they were taking off balance sheet loans, so the market didn't understand the amount of leverage that they had. And I think that their notable assets are 1 to 10 billion, and they have estimated 10 to 50 billion dollars in off balance sheet loans for that 1 to 10. So like anywhere between a 5 to 10x leverage ratio, and there's a bunch of money missing, and they don't know where it went. And there's all this other stuff happening. And the bigger problem, and I think this is tying into, there's starting some rumors of concern. I don't know how real they are, so don't take it with a grain of salt, is Jefferies being exposed. But the core, when you look at this, it's obviously not apples to apples, but it mirrors very similarly when you look at like we talked about at the beginning of the show with the amount of leverage in the system of crypto. And as it starts to get more and more complex, it gets more and more obfuscated where you don't know where the risk lies. And then when the deleveraging happens, you could be somewhere over as like in a Jefferies, bond portfolio or whatever it is, and have exposure there. That's going to effectively net out to be potentially a zero. And so this is picking up steam. I don't necessarily think this is like some kind of crazy systemic thing that's going to be like, I think Evergreen was one of the ones that comes to mind from a couple of years ago. But I think we will start to see more and more of this. And part of what this article or what's referencing is just like Tricolor was picked up the past few months, is as we start to see, or the past few weeks, as we start to see more and more of acute signs of recession and, delinquencies, you start to see on the edges these types of businesses that are prone to the consumer's lack of liquidity start to show up, because there's a lot of holes everywhere. Like we talked about the air pockets. It's like, when do they start to show up is the point. So yeah.
Yeah, this reminds me of the sort of what we, you're exactly right. We're starting to see little signs here and there of really where all the risk lies. And the other example that comes to mind was a month or so ago that, Klarna offloading a bunch of their buy now, pay later loans to an insurance company. And it's just shifting around the risk, shifting around the liabilities, and really obfuscating where the credit risk lies. I think we're going to start to see more of this, unfortunately, where we start to figure out, similar to the crypto side, it's like figuring out where the bodies are buried over the next several months. I think is going to be pretty interesting to watch play out.
Yeah, what the only caveat is, in the crypto space, there is no bailouts versus
Right.
if anything is systemically important, you're going to get bailed out in nominal terms, but not in real terms.
Anything else, Mike?
No, a few things just to call out if you made it this far. We had teased last week about updated pricing on the Onramp side, and we had a lot of interest. We're basically going to be moving to a flat pricing structure. If you want to book a consultation, you can reach out and we'll walk you through the pricing. It's really advantageous for clients that have wanted to work with us but a little hesitant on our BIP-based pricing. And then we have exciting news tomorrow related to the business side of Bitcoin adoption. So I'd encourage you guys to take a look at that and reach out if you want to learn more, because we have notable things being announced in the next couple of weeks, and I'd love to chat with anybody listening.
Awesome. Well, sounds good. I think we can wrap there, boys. Tight hour. Thanks for joining. See you guys next week.
Thanks, James.
Later. Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.